Hello, listeners. In today's podcast, we'll be talking about the RAM storm. Don't worry, there's some assuring development there. RBI's new policy to tackle banking incentives and compensation, and much more from today's happenings. This is Wiseversa's Today Daily, a podcast on business, finance, tech, and a bit of economics. Let's get started. If you go to Reddit and simply search for memory card prices, there's high chance that you would come across two kinds of posts, that is on Reddit. One, those who fume that RAM prices are increasing, and two, those who want to sell their 4 or 5-year-old RAM sticks for an exorbitant price. RAM price has increased so astronomically that architects, designers, and anybody who wants a slight bump in performance cannot think of adding an extra RAM. If you try searching online, you could do it now, you would see that Amazon would throw RAM prices for a 16 GB RAM or a DDR5 for rupees 38,000, while for a little known Indian brand, the DDR4 RAM price is about rupees 9,999. That is 1 rupee short of rupees 10,000. There are multiple reasons why RAM prices have increased. One prominent reason is chip shortage. There are some additional reasons beyond it. One, companies like SK Hynix, Samsung, and Micron, these were the big brands selling RAM for consumer applications. They started focusing on building high-value memory modules for AI applications. When this happened, there was knee-jerk reaction. Samsung in the month of September 2025 was among the very first to say that RAM prices have increased, and they had increased in that particular month of September 2025. The RAM prices had increased by 60% within just 1 month. To make matters worse, there was no clarity. Even today, if you approach a computer reseller or a wholesaler, they themselves are unlikely to know when the next supply or the next lot is going to be here. There is also an argument that since silver and gold and precious metal prices are increasing across the world, the price of semiconductors is therefore also increasing. However, it is slightly difficult to accept because the amount of silver which is used in the soldering joints is not a big number, and so is the case with gold. So whether silver or gold price and their rise is responsible is sort of questionable. There are many reasons though why RAM prices may return to some sort of normalcy. Now this is something which not many are talking. There are at least 5 to 6 good reasons, so hear me out. The first reason is the high cost of a RAM. Okay, it has increased the landing price of smartphones, tablets, computers, laptops, and even cameras. And these are machines which could have anywhere from 2 GB, 4 GB to up to 16 gigs of RAM. 2. In China alone, RAM and memory prices are up by nearly 600% in 1 year. So this has also affected the production and the sales of entry-level smartphone units. For example, brands like Xiaomi had shipped about 10 million fewer units from last year, citing that they had to brace up with the high cost of these RAM units or these memory modules. 3. This particular supply chain disruption is also affecting broadband hardware. All your LAN cards, your networking modules, they are also getting affected because of the increase of RAM modules. 4th, with users not being able to use higher RAM, software firms are being pressurized to maintain upgrades that are not resource intensive. So all these upgrades that you see around Chrome OS, Windows, they all have to ensure that they are not as resource intensive. 5th, on the enterprise side, there is a major fallout. For instance, today there has been a development. Cisco, it's a networking giant. Cisco, they recently posted their revenues, and the revenues were up by about 10% from the last year. But the gross profit was down from what analysts and the streets had expected. The shares apparently fell in the trading session in US markets, and this is a development happening today. Cisco's CFO informed the media that memory prices were the main culprit. He was quoted as saying that over the past 90 days, Cisco's purchase commitments had increased by 73%, a chunk of which was related to the memory cost. And sixth reason, rising cost of something as simple as memory modules and RAM is likely to make a lot of hardware out of the reach of students, creative artists, professionals who might want to get some additional work through their computers. It is also likely to make AI expensive because AI invariably has to pay for a higher input cost on RAM and memory module. On the flip side though, rising RAM and memory price has boosted the stock price of companies like SanDisk, Samsung, Western Digital, Seagate Technology, etc. All these stock prices have increased. I have seen a notable increase in the last year or so. So far I've given you the reasons, but one of the strong validation which we see today is an encouraging report which has come up. And this particular report says that RAM prices may come down in the 9-month to 12-month time period. There is a Chinese company named Semiconductor Manufacturing International Corporation, or SMIC. Basically, they don't manufacture RAM modules, but they have a foundry setup. On a conference call, SMIC's CEO, Zhao Haiyun, I hope I have the name right, he was quoted as saying that fresh supply for consumer electronics could be here in about 9 to 12 months. And he specifically used the word consumer electronics. For the second story of the day, the RBI has suggested a new proposal which could ideally cut down on incentives and shady sales practices to prevent mis-selling and reducing risks among banks. Although this policy is in a draft stage, the rules propose how bank staff gets compensated and incentivized for sales. The proposal does a couple of things. One, it places a restriction on third-party sales incentives for banking employees. Number two, banks have been advised to structure internal policies in such a manner that they do not engage in sales competition and also ensure that staff does not get pushed to sell products to vulnerable customers. Number three, banks cannot force customers to buy third-party products as a condition for receiving a loan or another bank service. The policy also prohibits dark patterns and manipulative digital interface designs to force sales. Banks have been prohibited from offering guaranteed bonuses for key management personnel and senior management. As per the RBI's announcement, the new rules are likely to be enforced from 1st of July 2026. Moving on, let's take a look at some of the quick stories from the day. The US labor market showed unexpected resilience in the month of January, with employers adding around 130,000 or 130,000 new jobs and unemployment rate dipping to 4.3%. ByteDance, which is the Chinese tech company and parent of TikTok, is reportedly developing its own AI inference chip and is in talks with Samsung Electronics for contract manufacturing. Heineken, the global brewer, has announced plans to cut about 6,000 jobs over the next 2 years as demand for beer falters and profit growth has slowed down in Europe and other non-priority markets. Google is offering voluntary exit packages to select employees in its global business organization, encouraging those not aligned with the company's AI-driven strategy to leave with severance pay. Moving on to financial stories of the day. On Indian stock markets, Sensex slid by 0.66% or 558.72 points. Technology stocks saw a decline owing to investor fear and weak sentiment. Gold rates of 24 karat purity were quoting 15,565 rupees per gram, marginally lower. International spot prices were trading well below $5,000 per troy ounce. Silver prices saw a notable correction, with spot silver trading 8.75% lower in international markets. There seemed to be some sort of profit booking sentiment in silver. Cryptocurrency, that is Bitcoin as well as Ether, were trading 1% lower. And that's a wrap for today. Thanks for listening and hope you are making Wiseversa Daily a part of your day. Do follow us on YouTube and on Spotify. Spotify will be the audio only experience, but most of our in-depth features and video features will be uploaded and made available on YouTube soon. We'll meet in the next podcast episode. Thank you and bye-bye.